This video is a review of Sojitz FY2025 second quarter financial results, the period from April to September 2025. Sojitz Corporation is a Japanese general trading company, Sogo Shosha, that engages in a wide range of businesses globally. Sojitz is one of the 7 major trading companies in Japan. In the first half of fiscal year 2025, profit for the period was 45.3 billion yen, which represents 39% progress toward the full-year forecast and is in line with expectations. The overall results were consistent with the company's full-year forecast, even though there were some revisions to individual segment forecasts. The impact of U.S. tariffs is expected to stay within the 5 billion yen buffer that was set at the start of the fiscal year. Profit increased 2.2% year-on-year, and the progress rate is 39%, which is in line with Sojitz's plan. Overall, this is a positive result toward the full-year forecast. Summary of profit or loss for the first half. Revenue rose slightly to 1,240.3 billion yen in the second quarter, showing a 5.1 billion yen increase year-on-year, mainly driven by growth in the energy solutions and healthcare and retail and consumer service segments, which offset declines in metals, mineral resources, and recycling and automotive. Profit rose by 1 billion yen to 45.3 billion yen, in line with the company's forecast. Core earnings fell mainly because of the weaker resource segment, while major one-time gains were limited compared with the previous year. Overall, Sojitz maintained solid profitability in the first half, with steady contributions from non-resource businesses supporting earnings, despite headwinds in the metals and automotive segments. Summary of profit by segment for the first half of FY2025 compared with the same period last year. In automotive, profit rose thanks to solid results in Latin America, which offset weaker sales in Puerto Rico caused by U.S. tariffs. In aerospace, transportation and infrastructure, profit increased mainly due to growth in defense and aircraft-related transactions and gains from the partial sale of the railcar leasing business. In energy solutions and healthcare, profit improved because of the consolidation of new energy-saving service companies and gains from LNG operations. In metals, mineral resources, and recycling, profit fell significantly due to lower coal prices and reduced production efficiency. Overall, total profit increased slightly, driven by growth in infrastructure, energy, and automobile businesses, offsetting weaker results in resources and other areas. Core operating cash flow. Resource and non-resource businesses. Sojitz reports steady progress in generating cash flows from its core operations across both resource and non-resource businesses. A larger share of profits now comes from non-resource businesses, reflecting strategic portfolio rebalancing through new investments and the replacement of existing assets. This approach supports the continued sustainable growth of core operating cash flow, strengthening Sojitz's ability to fund future growth initiatives, while also providing returns to shareholders. Sojitz is expanding its trading business to address global supply chain shifts, particularly in rare earths and gallium. With over 50 years of experience and more than 70% share of Japan's domestic rare earth market, the company is diversifying supply sources to ensure stability amid geopolitical risks. In partnership with Alcoa in Australia, Sojitz aims to establish a new supply chain for medium and heavy rare earths, with final investment decisions by the end of FY2025 and production beginning in 2026. Overall, Sojitz is taking a leading role in securing critical minerals to meet market needs and mitigate supply risks. Sojitz increased its dividend by 10% year-on-year, from 150 yen to 165 yen per share, in line with its policy of providing stable and predictable dividends. In May 2025, the company announced a stock repurchase of 10 billion yen, equivalent to 2.8 million shares, and completed the buyback in July 2025. Then, in August 2025, Sojitz canceled 15 million shares of its treasury stock. Under its medium-term plan 2026, Sojitz plans to allocate about 30% of its total core operating cash flow over 3 years to shareholder returns. Sojitz aims to maintain a progressive dividend policy, targeting a payout equivalent to around 4.5% of shareholder equity. In addition, Sojitz will consider flexible stock repurchases when it has surplus cash flow. Dividends have continued to increase, and share buybacks are also being conducted, so shareholder returns are strong. Stock price. This chart over the past year shows the stock price in Japanese yen at 4,103 yen as of October 30. US dollar ADR stock is currently inactive. Sojitz announced its earnings during market hours, but there was no significant price movement. Current PBR is 0.87 and PER is 7.4. Dividend yield is 4.02%. Compared with the past few years, the stock looks slightly expensive in terms of PBR, PER, and dividend yield. Like other Japanese stocks, Sojitz share price continues to rise, making it slightly overvalued compared to the past. However, a dividend yield above 4% is pretty attractive. Conclusion. As the first of the 7 major trading companies to announce its earnings, the results came in almost exactly as expected, in a positive way. Growth in non-resource businesses such as energy, healthcare, and infrastructure helped offset the impact of lower coal prices in the resources business. Shareholder returns remain strong, with higher dividends and completed stock buybacks, underpinned by a disciplined medium-term plan. Overall, Sojitz continues to maintain stable profitability and sustainable growth while providing attractive returns to shareholders.